Hi there, you're watching Buy Now, Sell Now on ET Now with me, Shreyanti Singh, and with me, Cheryl D'Souza. And over the next 1 hour, we'll help get all of your stock-related queries answered from both a technical as well as a fundamental perspective. Lastly, a tepid day of trade coming in, Cheryl, and it looks like Nifty is really twinning with the color that you're wearing.
Absolutely, just started twinning actually with the color I was wearing. I am wearing actually. Thank you for that. But very good morning to you, Shreyansi. If you look at the markets, yes, it was a tepid day of trade, but from there on we did slip to the negative territory, trying to make a comeback. That's the Nifty for you. Remember, yesterday the markets were under immense pressure in trade. We saw cuts of about 1.5% on the benchmark indices in yesterday's trading session, and today also we are now actually seeing that dip come in for the market. 25,770 thereabout is where your Nifty is trading. You have Nifty Bank that's trading flat with a negative bias, but what's key to note is Nifty Bank was the one that actually slipped into the negative territory first up, and from there on now it is seeing some sort of a recovery. Advanced return ratio for now is tilted in the favor of the gainers. Talking about the gainers then, Tech Mahindra has got that upgrade coming about for the counter, and that's one of the reasons why you've seen the recovery come in for Tech Mahindra, and that is the top gainer on the Nifty as we speak. We have M&M on back of good numbers coming in. The fact that their SUV numbers, the growth numbers have come pretty healthy for the month of September. Also, they are very positive about the festive season, so M&M over there gaining 1.5%. Bajaj Finance, Wipro, Finserv, Bajaj Finserv are the other set of gainers. While on the flip side, you see is the Asian Paints that's seeing a downtick about 2.3%. Bajaj Auto has come out with those numbers as well, but it's down about 1.5%. Maruti Suzuki, HUL, Tata Steel are the other set of losers at this point in time. Let's take a look at the sectoral indices and what's the picture there. Remember that yesterday you only had the metal index that was holding the fort. Today the picture is looking pretty mixed because you have IT, you have PSU banks that's gaining in trade today, while on the flip side realty taking a bit easy after the stellar run up it's seen over the past few trading sessions. It's down about 0.7%. Add to that list you also have realty index that's seeing a downtick at this point in time. So that's the way how the markets are looking like right now, Shreyansi. But we have Kunal Bothra who's joining us on the show. A very good afternoon, good morning to you, Kunal. And how is the markets looking like to you at this point in time, given the fact that we've taken a bit of breather after scaling that 26,000 mark on the Nifty? You had the metal that was shining from the front, but what's your take now?
The markets are displaying the exact same colors as what you guys are wearing. One index green, one index red. But I think what we are seeing right now is that the markets are trying to absorb the kind of selling which has happened over the last 2 days. Bank Nifty correcting by 1,500 points in just the last 2 trading sessions, and I think after that there's bound to be a bit of stability which may come back. But then what matters over here is that whether there's the bulls make a strong comeback and we break past about the 1 day, 2 day previous swing highs. I think that's going to be the litmus test for the bulls this time around. So what one should be waiting out for is that strong confirmation where the index, both the Nifty as well as the Bank Nifty, breaks past about the previous day swing highs. If that happens, then I would believe that we could probably get to much more of a V-shaped recovery. But if that doesn't happen, then we may probably get back into a consolidation with a slight down drift for both the indices.
All right, so that's the take coming in on technical front when you talk about the markets. But Rajesh, when you talk about the news flow, starting this month, the news flow is going to be pretty heavy for the markets because you will have the MPC meet outcome. All eyes on what the Reserve Bank of India or the MPC will actually do. Apart from that, you will be kick-starting the earnings season once again. So IT sector, along with IT sector, all the sectors will be in focus. So what are the cues that you're watching out for very closely? Which are the sectors that you are eyeing out? And I missed mentioning about the auto sector as well.
Good morning, Sharon. Good morning, Shashi. Good morning, Kunal. And before I come to your answer, I would like to tell Kunal that since Cheryl is wearing red, I am wearing blue, so we are trying to balance out the market on both sides. So let the both side peers and both be happy. So that's what we are trying to do before a holiday. Anyways, coming to market, we are looking at a lot of data in this month, no doubt on that. RBI, MPC meet, IIP, service PMI, all those things are there. Even PMI data from all across the world is going to come. Employment data from US, that would be a major issue thing to watch out for. These things are there, of course, but the best part is this is a festival month. Navratri is going to start very soon. and by the end of the month it would be Diwali. So a lot of Diwali sales, festival sales would be washed out for retail also. As far as auto is concerned, we are not very much excited about auto numbers coming this month because, as we all know, the last 15 days of last month was a Shraddh period and would be subdued number. But despite that, we have seen Bajaj Auto and Mahindra giving very good numbers. So that's a good part to that, and that's going to add to Nifty Auto too. And the other thing that one should keep a watch on would be IT and banking sector, right? Because they would be coming out with their quarterly updates very soon. So these are some of the sectors which we are looking at this point of time.
Rajesh is keeping his expectations a little bit muted at this point when it comes to the auto space. But let's kickstart taking all of your stock-related queries. Then remember, viewers, you can write to us on the number that will be flashing on the top of your screens as well. But remember to mention the buy price as well for stocks that you're already invested in, and for stocks that you're looking to invest in, do remember to mention the time horizon as well. The first query is coming in from a viewer named Vishal. Now, of course, you do see the number that is flashing on your screens as well. Remember to write to us there as well, and let's start taking your queries. And the first query is coming in from Vishal, who's writing to us from Dubai. Now, Kunal, I'm going to come to you because he's asking us about Trent, and he's wondering if at the current market price he can make a bet when it comes to Trent then.
Yeah, call it defying gravity. I think the stock has done exceptionally well over the last 2 years or so, and I think specifically from that 1500 point when the stock managed to break out, we've seen almost consistent quarter after quarter price uptrend for Trent. Now almost at this 8,000 mark, it's very difficult to try and suggest a buy over here. But I think for traders who are looking out for holding the stock in terms of a portfolio, now that Trent is also part of the Nifty 50, I think it's best advised to try and wait for retracements and then buy the stock on dips in phases. So I think what we're seeing, for example, in the last 2 days was a 5%, 7% correction which has happened for Trent. If in case the stock corrects say by another 3-4%, then broadly 10% correction from the previous swing highs becomes a good entry point for traders on the longer term basis.
That's about Trent coming in, given the fact that this one has seen a stellar run up. But let's move on then. Let's take this next query coming in from Dinesh, writing to us from Bangalore. And he has 500 shares of Balaji Amines at a price around 2,222. UPL at a price of around 588. Kunal, he's saying he can hold on for the next 2 to 3 months. He wants to know what could be the target for this one. I'll take the targets from you, but I will come to you, Rajesh, after this to get your view coming in on the chemicals as a specialty chemical space, or for the matter of fact, agrochemical space as well. So Kunal, first coming to you.
See, I'm very bullish on the space, and my sense is that we are looking at a phase where we may have probably formed a major bottom for many of the stocks over here in the specialty chemical space. Now, Balaji Amines may not be the best chart over here, but because when a sector gets into a turnaround and when the worst comes it goes behind into the sectors, we may slowly and steadily see a gradual pick up into the stock price. So I think Balaji Amines in that sense could probably be a stock which may see a potential turnaround sooner or later. If a long-term investor, I would suggest a hold. But for UPL, I think the case could be a lot more stronger. The stock has already seen 3 months or 3 candlesticks of successive revival over the last few months. And what we are seeing right now is that the stock trying to hold closer to that 600 mark from an earlier bottom, which was around the 500 levels for UPL. So which means that the stock starts to look much more attractive at current levels. I would look out for targets in the range of at least 750 for UPL, and for Balaji Amines it should be closer to 2550, 2580 over the very near term.
Right. Rajesh, what's your take coming in on this entire chemical, specialty chemical space, or for the matter of fact, companies that are linked to somewhere to the agri space as well?
See, I second Kunal's thought that it has bottomed out, because if you see in the last almost 1.5 years to 2 years, these stocks have underperformed, highly underperformed, I would say. When the entire market was moving up, they were just correct. So the entire thing has bottomed out just because of the fact that they have seen quite a stellar run during COVID periods, and then the valuation was stretched and started correcting. These things happened. But now we find that demand increasing, prices stabilizing, and we are bullish on the entire chemicals facility space, especially if we talk of large cap names, Balaji Amines, Deepak Nitrite. These are some of the names. In the mid cap, we are given a buy call on Asian chemicals too. As far as UPL concerned, The major problem with this company is the huge debt which the company is holding. But the management has said they are trying to reduce the debt. If this happens, then it can give very good returns. Otherwise, if you look at the product profile, they have huge product profile, operations based not only in America, not only in India, but also America and Brazil. So things are looking good for UPL too, especially the agrochemical space part, because the government's focus is on rural development, and with the kind of monsoon we have seen this year, I think agri is going to do well. So UPL is a buy, Deepak Nitrite is a buy, Archean Chemicals is a buy from our side.
So Rajesh is bullish on the entire specialty chemicals pack, and we'll continue taking your stock-related queries after a short break. But as we
Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. The markets are actually pretty flat with a negative bias as we speak right now. But let's continue taking your queries, and this one is coming from Akhil, is writing to us from Delhi. He wants to know, for investment purpose, Rajesh, a couple of stocks that he's mentioned, especially on the auto ancillary space. Where should he actually go ahead and park his money right now? Should it be a Motherson Sumi or Motherson Sumi Wiring, or for the matter of fact, even Sona BLW? He wants to understand about the entire auto anc space as well as Texmaco Rail. Should he look to buy right now for a period of 2 years? Texmaco Rail, I'll take it to Kunal, given the fact that he can give us a check on the charts for Texmaco Rail. But for auto ancillary space, I'll come to you because it is going to be a difficult one to answer given what is happening globally right now. Rajesh, you have a lot of global automakers who've come out with a profit warning. That's one of the reasons why you saw some of these names actually decline in yesterday's trading session, like the likes of Samaloim, for the matter of fact, Sona BLW, Uno Minda also add to that list. So what's your take now? How should one read into this space, and how does it look to you for an investment purpose?
And the auto ancillary pack as a whole, because see, despite the fact that some of the companies globally have given a profit warning, we cannot deny the fact that every month-on-month numbers are coming in India, which are very exciting. We were not expecting good numbers this month too from any of the companies, but we have seen that Bajaj Auto Management came in with very good numbers. Going forward too, with the festival season, marriage season, I think two-wheelers are going to do well. So when auto is doing well, how can auto ancillary be left behind? So these are going to do well. Plus, there is a transformation going on in the entire auto space as such, from ICE to EV to hybrid, and then going forward after 4, 5, 6 years down the line, there might be a hydrogen vehicles going around. So there is a lot of transformation. People are going out and buying auto. There may be small dips here and there, but the entire thing is exciting for at least 3, 4 years down the line. As far as investments are concerned, I think Motherson Sumi Wires, that the two-digit stock, which is has not performed well in the recent past, despite the fact that is the major harnessing company in its segment. That can give good return the next 1 year if you hold for 1 year. You know, one day the other one, LG Balakrishnan, which is into the chains and all under the brand Roland, is doing very well. FIM industry in the auto space, which makes lights and all for auto, and the entire OEM pack is under their belt. So these are some of the companies which we like. Even in the battery space, we like Excite or Amara Raja battery. So it's an exciting space to be into. So you have to choose your own stocks based on fundamentals. You can go ahead. For a time period of 12 to 18 months, I think decent returns can be expected from this. And you said Texmaco Rail to be replied by Kunal. So I would like to just add one more thing to that. So if you want to buy Texmaco Rail, depending on Kunal's recommendation, that's technical side. But what I would like to add is Texmaco Infra is a holding company of Texmaco Rail, where they hold shares of Texmaco Rail. And again, they have a huge land bank which is going to be developed in the near future. If the company has some plan, the company has some plans, but maybe in the down the line they're going to develop that. So that can be a very good long-term buy at this point of time. For Texmaco Rail, of course, Kunal is going to give.
Kunal, what's your view coming in for Texmaco Rail, given the fact that you have Rajesh talk about Texmaco Infra, which is the holding company of the counter.
Yeah, I think the charts are very attractive now, especially after this 30% correction for Texmaco Rail, where the stock has moved from 300-ish to now 200-ish. I think it's a very good zone where you can look to buy.
Well, absolutely. So, a good zone, and that is what Kunal has to say about Texmaco Rail. But Kunal, I'm going to come back to you because we have Sana who's writing to us from Chennai, and she wants a chart check when it comes to Lemon Tree Hotels. Now, when you take a look at the stock on a 3-month basis, we've seen some cuts coming in, 16% decline coming in for that one. But what do you see on the charts? And also, she's asking about Titagarh Rail. What do you have in mind when it comes to this one as well?
See, I think for Lemon Tree, the charts have become a lot more weakish because over the last 2 months when the stock has fallen from 155, 160 to 120 levels, there are two things which have happened. One is that the stock has broken below its 200-day moving average. There was a bounce, but the bounce halted almost exactly at the 200 DMA for the stock, and now it's almost come back to the previous lows. And the second, the more important thing is that there's been a bearish crossover where the 50 DMA is crossed below the 200-day moving average for Lemon Tree. So both of them indicating that the stock is going through a process of a downtrend. Now the first part of confirmation when we get to see such data points is wait for the stock to come back above the 50-day moving average, let it sustain there for at least a week. That's where we may probably expect a contra buy for stocks. So I think in that sense, wait out for the point where the stock crosses above say 130, 135, where its 50-day moving average is placed. Only then would suggest a buy.
All right, let's move on then. Let me take this next query that I have. This one is coming in from Kusuma, who's writing to us from Pune. Kunal, coming right back to you, wants to know about Oberoi Realty or for the matter of fact, Garden Reach or Bharat Dynamics. Which one to buy for a period of about 6 months is now the right price, or which would be the right price for these counters and a target?
See, I think for the next 6 months, I would probably bet more on the real estate pack because my sense is that Oberoi Realty, Godrej Properties, I think these are two names especially which you can consider from that kind of a time frame, because over the last 2-3 months we've already seen the real estate stocks going into a 15% to 20% correction. The momentum has come back again into the real estate stocks, and I think that's where we will probably see a better potential better returns over the next 3 to 6 months. So would bet on Oberoi Realty from the 3 names which you mentioned.
So that is the take coming in. Oberoi Realty is a good bet, and that is the word coming in from Kunal as well. But we have Vignesh who's writing to us from Vellore as well, and he's asking us about Ujjivan Small Finance Bank. 1200 shares at a buy price of 45 rupees is what he has, Rajesh. So what do you have in mind when it comes to Ujjivan Small Finance Bank?
I think one should try to get out of this. The numbers are not that exciting. It's not performing. Rather, one should look at investing in full-fledged bank. That's the entire commercial pack. Maybe in the mid-cap space, we have Bank of Maharashtra, which is doing very well. The numbers have been very good from the last few quarters. Trade deposit ratio is around 87%. PAT has gone by around 47%. So there are better names in PSU side which one can look at.
All right, let me take this next query that is coming in from our viewer, that is Sridhar, writing to us from Coimbatore. Wants to know whether it makes sense to buy LT Foods for the short term, Kunal. He wants to know about a target and a stop loss. If you are going to say yes, you can go ahead and buy LT Foods. And the other one is Nalco. He has 215 call option at 9. So he wants target and a stop loss for that.
So for LT Foods, I would say just wait out because I think the correction is not yet over. The stock formed a bearish flag formation on the charts on the hourly basis, which means that there could be a retest towards the 50-day moving average. That could be at least another 20-25 point correction for the stock. So would suggest a wait on LT Foods at current levels. For Nalco, I'm not sure of the call price, the current market price of the call option, but I'm very bullish on the metals pack over the next 1 to 3 months. And my sense is that many of these metal stocks should see a second leg of uptrend. So I think if you can hold on to the options, say for the next 1 or 2 months, and then maybe roll it over, then I think it's a better strategy.
I'll tell you what, I'll come right back to you because we do have Raman who's writing to us from Thrissur in Kerala, and they're asking about Cochin Shipyard. 3,000 shares is what he has at a buy price of 2,738, and he went ahead and exited actually at 1,770. Of course, incurred heavy losses there. So he's wondering if there's a possible low level that he can enter at again.
See, I think the best time to try and buy these stocks is either when you see a volume jump into these names and almost 3 or 4 consecutive days when the stock moves up higher or shows a positive closing, and then on the same time you see these stocks breaking past about their previous swing high. So what's happening is over the last 3 months of this correction, 3-4 months, of this correction, these stocks have been making pattern of lower highs and lower lows consistently, and I think that's one of the major reasons why the stock, even after a process of a bounce, continues to correct and makes a new low for itself. So difficult to anticipate that till what level the prices may correct. It may retest the 200 moving average, which is currently at 1500 mark, or maybe even go below those levels. But the best time to buy is when there is a confirmation of a turnaround or a reversal. That could happen once the factors which I just mentioned gets triggered.
All right, so that's the take coming in on Cochin Shipyard. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's continue taking your stock-related queries. Then, Rajesh, I'm going to come to you because Subrata Mukherjee is writing to us from Kolkata. He wants to buy Bank of India. What is your view coming in here?
It's a good bank. Balance sheet has been clean, doing very well. Numbers are good. Asset quality has been improving. So one can go long with a time horizon of maybe 1 year or 18 months down the line. 15 to 20% upside from the current market price is quite possible.
All right, this next query is coming in from Professor Talam, who's writing to us from Andhra Pradesh. 2,250 shares of BEL. He's purchased at levels of about 307 rupees per share. What should he do right now with this particular counter? Kunal, BEL, what's your view on this one?
I would be bullish on the stock, and I think after this recent recovery as well as the price trend, looks like the stock is getting ready for a breakout, potentially above the 50-day moving average. So I would suggest a buy if you're looking to buy at current levels, and if you're already holding on from higher price points, then I think it could be a good time where you may look to even average.
Alright, so that's a buy coming in on that particular stock. But we also have Padmaseva Rao writing to us from Bangalore, a regular viewer of the show, and he's writing to us about Varun Beverages. A good bet at the current price, Rajesh?
Of course, it is. With the kind of heat wave we have seen in the entire country, the numbers are going to be good. Not only in India, but they have operations in Sri Lanka and Africa also. All the divisions are doing well. They have recently launched the non-carbonated drinks, which are doing very well. And the best part is the consumption theory is doing good. One can go long on Varun Beverages.
All right, long call coming in for Varun Beverages. What about Dalmia Bharat? Kunal, we have Imran from Kolkata who's sitting with 100 shares of Dalmia Bharat at a price of 1,963 rupees per share. He's been holding on to this for the last 5 months, wants to know what's a short-term view coming in on this one. What's your take for Dalmia Bharat, because it is from a pack which is a cement pack which also moves based on seasonality. But on the charts, what are the charts indicating?
Yeah, so seasonality should be good for the cement stocks, because my sense is that October as well as November, I think these are months generally where we see stronger activity in terms of price performance. Now the other part for Dalmia Bharat specifically is that it's at a very critical point, because today the stock is on the verge of closing above the 200-day moving average. It's almost at those levels. So if it sustains above this mark of 1960 approximately, then it could confirm a breakout. Now this could be a very good breakout for Dalmia Bharat over the near to medium term, and potentially this could also call in for a stronger revival. So I would suggest to wait out for the next couple of days in case if the stock sustains above the 200-day moving average, which is at 1960 mark. I would believe that you could probably see an upside of at least 5% to 7-8% in a very short span of time.
Alright, Kunal, we also have Kabir Bedi, who's written to us from Patiala in Punjab, and he has 5 lots of Apollo Tyres, 520 put option at 8 levels this morning as well. What is your advice coming in on this particular counter?
He has put options.
That's correct, yes.
Okay, so I am actually bullish on Apollo Tyres, and my sense is that the tire stocks over the very near term could see a big upside. So I'm not sure of the current market price of this 520 put option which you have for Apollo Tyres, but I would suggest that you keep a stop loss to this trade, because in case if the stock crosses 550 mark on the futures level, I think currently it's at 545 on the futures mark. So if it crosses 550 mark and closes above those levels, it could potentially mean an upside of at least 5% over the very near term for Apollo Tyres. So keep a stop loss in this trade.
All right, coming right back to you actually, Kunal. This one is coming in from Shalini, writing to us from Kerala on AB Capital, 170 shares at a price of 232. Should she look to hold or look to sell this one? Any short-term views coming in on this?
And I'm very bullish on AB Capital and have been very bullish on the stock.
I like that expression that you actually gave for AB Capital. In fact, I wanted to go to Rajesh, but I know that you have a positive view on AB Capital.
Yeah, I'm very bullish on the stock from a long-term play, and I think you need to be a buyer on dips for the stock, because my sense that the stock is getting back into a big turnaround mode. So bullish on the stock from a long-term play. If you can buy at current levels as well as wait out for corrections as a good averaging opportunity, that could be a very good strategy for the stock.
Are you also that bullish? Is this one also going to be where I'll have a consensus buy call from both of our experts shouting from the rooftop? This one is a buy like you all did for ITC. What's your take, Rajesh? Are you do you concur with Kunal's view when it comes to AB Capital and the growth prospects?
In fact, we have come out with a IC report sometime back, maybe around 6 months back on this, and we have been bullish. We have recommended to all our clients to buy this. We think that this is one of the highly discounted NBFC, I would say, in the entire space, doing very well with not only insurance, mutual fund, almost every vertical under their belt. They should be in one's long-term portfolio.
So that's a very big buy call coming in on AB Capital from both of our experts. But moving on then, we also have Mahalakshmi who's writing to us from Hyderabad. LIC Housing Finance is what she has, and she has 220 shares at a buy price of 725. So what is your view on this, Rajesh?
Add more, I would say. The entire space is going to do well. Realty is doing well, and since realty has its own lot of problems, so for retail investor, housing finance sector as a whole is a best choice. And LIC being one of them, it's the market leader with the number one AUM, trading at a PE of around 10, 12, whereas the second one, Bajaj Housing, is trading at a much higher valuation. Backing of LIC, they have low cost of fund. In the recent quarter numbers, the disbursals has gone up. So one can buy LIC at this point of time for a long-term portfolio.
All right, this next query that I have is coming in from Manoj, who's writing to us from Mumbai, has 2 shares, or rather wants to buy 2 shares at the current price. Kunal, BHEL and GAIL. What's your take on both of these counters? Power sector, energy sector, both of them are PSUs.
If you're okay with a bit of a high beta, then I would recommend BHEL at current levels. The stock seems to be coming back into a breakout mode. It's trying to retest the 50-day moving average. I've looked at the charts and the price study over the last few days, and it looks like the stock is getting ready for a breakout. But of course, it's going to be a bit more high beta, so you'll have to be a bit more cautious with your position sizing over here. GAIL, the only concern is that the stock has already run up. So what I'm anticipating for BHEL has already happened for GAIL, and the stock has already run up, crossing about the 50-day moving average by a margin of 5-7% at least. So which means that maybe buying on dips for GAIL could be a better strategy.
Alright, so buy on dips coming in for GAIL, but let's also take a look at the query coming in from Krishnan Rajgopal from Mumbai, who's writing to us about Zomato then, Kunal, because he's wondering if it's a good time to buy at the current price.
I think it's a very good time to buy the stock. My sense is that 250 to 60 approximately could be a good base for the stock. So buy on dips is what I would advise. You can start at current levels of 275 approximately where it's trading right now. And within the band of this 250 to 60 mark, I think in case if the stock happens to correct further, look to average further.
All right, so that's the take coming in on Zomato. On that note, we'll slip into a break on this edition of Buy Now Sell Now. Rather, actually, before slipping into break, let me bring on board my colleague Sharad, because Share India has underperformed his peers in the last 1 year. But what are the reasons for his underperformance? Sharad is here with all the details. Sharad, I believe you have done the detailed analysis on what exactly is happening in this regard. What have you found out?
Air India has seen a strong underperformance this year itself, and on a 1-year basis also, while you have seen broking stocks like IIFL Securities, MOSL and even Angel were outperforming the company, and the company itself has just given almost 23% returns in this year, where there has been a significant rally when it comes to the broking stocks. Now, of course, what is ailing Share India Securities? That is an important thing to look out. The stock is down almost 18% from its 52-week high levels. And interestingly, the IPO has been delayed of Archit Newwood. Over there, the queries were also raised by exchanges. And also what we saw in the numbers, especially in the promoter shareholding numbers, there has been a decrease in the promoting shareholding as well. Overall, recently there was one more announcement which of course investors had not taken it on a right spirit. That was the cancellation of acquisition of the DSM Fresh Foods as well. So these are the current factors where the important kind of a downward movement was seen in the stock itself. Now interestingly, there is a problem coming in the SME IPO space as well. Its company Archit Newwood would be in focus, where the IPO delay was there due to the queries raised by the exchanges and over there itself, the focus was there on company's profitability versus the peers, and there was a sudden increase in the margins in just 1 year before the IPO of the company. The margins are almost double of the peers of Rushil Decor and Century Plywood. And if you look at the overall margins, the company mentioned 20% PAT margins in FY24. This IPO is managed by Share India, and overall, currently, nothing has been communicated yet at what is going to happen for this issue. Now, the Share India's issues in 2024 includes names such as VVIP Infotech, Gev Info, AVP Infra, to name a few as well. Now, also, media reports are suggesting that SEBI is investigating 6 domestic investment banks that have worked on small business offerings as well. Now, SEBI is worried on the malpractices which might be involved in the SME IPO space, and a higher fees may have been charged to show up high subscription fees. So we at ET now always maintain to exercise caution, especially in the euphoria in the SME IPO segment.
Absolutely, you have to maintain caution, especially where there is euphoria, and you have a lot of regulators actually talk about the euphoria that we are witnessing in the SME IPO space. But on that note, we slip into a break. When we come back, we continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries. This next query is coming in from Yuvraj. He's writing to us from Chennai. He has 40 shares of Titan. He's sitting with a profit of about 20%. He wants to know whether he should look to book profits and shift to another stock or continue to hold on to this one. I'm actually tempted to take this query to both of you, but let me take it to Rajesh, because Titan in news also, because there's a lot of things moving for the entire gold space or jewelry space positively, isn't it? But what's your take coming on Titan? Do you think now is the time to book out profits? Because Titan for a long time didn't do anything actually.
They didn't do anything because of the large cap space and the valuations were stretched somehow. But at this point of time, the kind of demand we are witnessing in the entire jewelry space, I think it's one of the best stock to be in this space. If you want to be in this space, continue with the stock. Don't worry about the daily volatilities, because for a longer term horizon, I think with the kind of stores this had, not only in jewelry or watches, even Taneria is also doing well. That the garments business is also doing well. I think this is a stock to be in for a long term. So unless and until you are in need of money, which I don't think so, because you said you want to switch, so you need to be into this stock. Continue to hold.
Call coming in from Titan, and also one of the reasons why Rajesh of the view is because it's a large cap stock and you cannot expect that much of a swing coming on a large cap quality name. But Kunal, on the charts, what's it telling you?
I'll give you a fascinating stat about Titan. Over the last 7 years, 2017 onwards, to be precise, there have been 6 times when the stock has given a golden crossover, and on average, the returns for the stock post the golden crossover is a staggering 50% to 70%. Now, the reason I'm flagging this off is because I think the last 2 or 3 days back, the stock has given such a kind of a similar golden crossover where the 50 DMA has crossed above the 200 moving average. So if history is something to go by, we can expect a much more stellar upside for the stock in the next 1 year or so.
Alright, so Titan sparkling bright on the back of that stat that Kunal just shared, and golden crossover is something that we've seen a good rating coming in from Kunal as well as Rajesh when it comes to Titan. But we'll take this query coming in from RC Sharma from Jaipur. He's writing to us about ACC 100 shares at a buy price of 2,700 rupees. Rajesh, should he hold on or exit at this point?
You can hold on. The entire infrastructure story, the real estate story is doing very well. ACC and Ambuja being one of the largest in the country up after Ultratech. I think with the kind of capacity, with the kind of management they have, and the kind of demand which is going to be there in the next 2-3 years, considering CapEx and all also being announced by not only private sector but also government, I think one can be into ACC. Any dips should be taken as an opportunity to add.
All right, so that's a take coming in on ACC. Let's talk about HCL Tech as well as Sequence Scientific. We have Naman Devra, who has both these counters, 60 shares of HCL Tech at a price of 1,808 rupees per share, Kunal, and Sequence Scientific 400 shares at a price of 228 rupees per share. Minimum 1 month perspective he wants to know about these counters, though he had bought it for trading perspective, but he's saying he can hold on for a month.
See, the only concern with Sequence Scientific is that you've bought at the higher end of the price rally. The stock has already run up from 160 to 240 in the last 1 week or so. And buying the stock at the peak of momentum may not turn out to be a better strategy if your time frame is short term, because what could happen is initially that the stock takes the first 1 or 2 weeks of correction, the indicators cool off. So you may probably lose the advantage over there. So my sense is that if you're looking at a short term kind of a time frame, if you're specific about it, then I think for Sequence Scientific, I would suggest that maybe closer to 240 you can look to book profits and buy the stock when it dips back again, say closer to 220 to 18 mark. On the other hand, I think HCL Tech also on the very short term charts looks to be getting into an exhausted range at this levels of 1800 approximately. So you can consider booking out profits at slight higher levels for the stock and look to buy back when it corrects towards 1700, 1750 range.
Alright, so look to buy back when it corrects over that particular range that Kunal mentioned, but I'm going to go to you, Rajesh, because there's Vivek who's writing to us from Delhi. 167 shares of PB Fintech is what he's holding and a buy price of 1,625. What is your view coming in here?
Despite the fact that insurance as a sector is doing very well, I think it's better to be in a large cap insurance, direct insurance company like LIC or a Pru ICICI, HDFC Life rather than going for PB in fact where the numbers are not that exciting. So I think one can switch to LIC at that point of time, which is trading at a huge discount to its previous.
All right, this one is coming in from Maruti. Kunal, this one is coming from Vivek. For Kunal, it's on Maruti, and he has Maruti from the levels of 7,700 rupees per share. He also what's the target to keep for this one, or what to buy instead for the next 2 to 3 years. He's sitting on good set of profits for this one, excess of about 5,000 rupees per share profit on Maruti Suzuki. What's your take, Kunal, now?
Continue to hold on. I'm not sure that whether there is a better option available in the auto pack, if that's the sector which you're looking out for specifically, because at current levels it looks like that the worst could be behind for the stock. The momentum is coming back, the volume, the trading activity is trying to is getting back into a better position for Maruti at current levels. So which means that you could probably see a zone where the stock may continue to or start to outperform many of the other peers from the same sector. So I think in that context I would suggest a hold on Maruti.
Alright, so that's a whole recommendation coming in on Maruti Suzuki as well from Kunal. But Kunal, I'm going to come right back to you because we do have Madhusudan who's writing to us from Delhi. He's asking about PNB. He has 5,000 shares at a buy price of 60 rupees. Is it okay to hold on to this one, or should he move over to SBI then?
See, I think what we are seeing the last 5-6 months is a huge underperformance from the PSU banking lot. In fact, we did this momentum study over the last 3 months back, where PNB, for example, was almost at 130 approximately. SBI was at 870, 900 kind of a zone, and from there the PSU banking stocks have started to underperform. Even at current levels, it doesn't look like that a bottom has been placed for many of the PSU banking lots. So price wise they may look attractive, but if there is no major trigger in terms of a bottom formation, then you might probably have to wait out for stocks before there's a major turnaround. So the factor over here is time element. I would probably sense that SBI could be a better bet, but may not be a best time to buy the stock. Wait out for a confirmation. If in case these stocks breaks past about their previous major swing highs, then I think could be a good buy for stocks like SBI.
All right, so that's the take coming in on some of the PSU counters. With that, we come to this end, to the end of this edition of Buy Now, Sell Now. Thank you so much, Kunal, as well as Rajesh for joining us on the show. As always, taking the viewer query pretty patiently. And with that, we come to the end of this show. Thank you so much for watching. It's a goodbye from Shreyansi, Mysore, and the team that put the show together.